Our next guest says all those pharma deals are part of a broader merger boom. He's Robert Profusek. He's chairman of the Global and Merger Acquisition Unit of law firm Jones Day. Bob, nice to have you back on the program again. I want to start with this about what is the conversations going on inside of corporate boardrooms these days. I mean, just a year ago, CEOs were sitting on a pile of cash. They were sitting on their hands. They had no plans of buying any companies, no matter what the price. How has the conversation changed?
Well, I think we've finally gotten rid of the fear that was in executive suites, in the boardrooms, and in investment committees of major private equity firms. The financial crisis, it seems like it was forever ago. It really wasn't. And we had, for the longest time, all these aftershocks. We had the EU situation, we had recession itself, and we had all of this stuff, I mean, you name it, in Washington, which disrupted everything and made major commitments hard to really come to grips with because of uncertainty. Now, are we entering a stage of animal instincts? Possibly, because I think the fear is gone, largely gone. Sure, there's a risk of interest rates going up and all the rest of it, but companies haven't had much to do with their money except buy back their stock.
You know, there have been a lot of deals, Bob, in the first quarter of this year. Many of them concentrated, as we've just been saying, in the pharmaceutical business, also big cable deals. As you look forward to the rest of this year, where might you expect to see more deals?
Well, I think we're going to see a lot of deals in commodities in general. Whether there was a giant cement deal announced 2 weeks ago, $50 billion. That, by anybody's standards, is a pretty big deal. We're going to see things in the energy space. Tech is hot as can be. But maybe pharma is a part of a broader spectrum of deals in healthcare. Healthcare has just got to get more efficient. Well, how do you do that? In addition to worrying about your pipeline, you got to worry about your cost structure, and synergies are a huge part of the equation.
And these are really bold deals. They have big price tags. Do you think that there's going to be any problems from Washington and regulators about approving these deals?
Well, the regulators, beginning last year, got a little bit tougher. I mean, frankly, I think the regulators took their foot off the brakes a little bit in the immediate aftermath of the financial crisis, in part to keep business going. We saw some indications that maybe that things would be looked at more carefully. But, you know, big deals are very self-selecting. You don't sign one up if you think there's a significant likelihood it's not going to happen. Yeah, there are surprises. AT&T, T-Mobile, what was that, 18 months ago or so? The American Airlines US Air deal. But deals tend to get done because, among other things, they're rarely blocked. They usually can be fixed and the antitrust issues accommodated.
All right, Bob, thank you so much. Bob Profusek from Jones Day.